Hello traders and welcome to ChrisFX. Today we are gonna talk about the fair value gap and why the fair value gap is very important in order to be able to identify great trade opportunities and how if you master the fair value gap, you will be able to make the best trading decisions in the long term. To begin with, for you traders who are very new to trading or for you who are new to this channel right here and you don't know about smart money concepts, I will go through what is a fair value gap. A fair value gap is a gap, as the word says, which is formed between the immediate right candlestick and the left candlestick. In this occasion, as an example, if I zoom in right here, what can we see? We have a very impulsive candlestick, which is this candlestick right here, this blue candlestick that you see, and immediately on its right, what we do have is a bearish candlestick which did not fill this area right here between this candlestick, this gap, let's say, over here, which is formed again by the candlestick on the right and the one on the left. So, in other words, if the wick of this candlestick that you see right here would have been until here, then there would be no gap between this candlestick and this, because this would have been tested right here. On the other hand, the opposite could also be the case. If this wick right here would come down and close to the top of this wick right here, then this area, this blue area, this bullish candlestick area has been fulfilled and there is no fair value gap. I will show you the fair value gap on a bullish example as well, and then I will take you through how important it is and how you can utilize the fair value gap in order to enter winning trades. There you go. This is another example of two fair value gaps actually. One fair value gap you can see right here between the wick of this candlestick and this candlestick, because this has not been fulfilled. Okay, this red candlestick right here has not been fulfilled, this area. So we had only sellers and an equal amount of buyers has to come at some point to fill in this area. And then we had another fair value gap, which was between this wick right here and this one right here. It did get fulfilled until this area though, which now makes it this one our new fair value gap. You see why? Because it got filled until this area right here. But this area right here, all of this area remains unfulfilled. So we are expecting for those areas to be covered at some point in time. As you can see, price is coming back and retesting this area. Now that we got that out of the way and we know what a fair value gap is, I will show you how to utilize the fair value gap to your advantage in order to increase the probability of winning your trades. Plus, with this video, I will show you a secret that people are not talking about. You have been probably hearing about the same stuff, but today I am gonna show you a trick on how to use the potential fair value gap, as I love to call it. I will first start with an example on Nasdaq and not on USD CAD, but I will move forward with the example on USD CAD as well, because this is a concept that you can use on any asset that you want to trade. Let's go first and start from Nasdaq. And I will remove my drawings right here. And yesterday we were expecting to go long at some point. What we saw impulsive grabs of liquidity, as you can see right here, and then I had drawn my fair value gaps. First of all, if you have a bias, for example, if you have a daily bias and you know, for example, let's say, or you have way higher probabilities of price following your bias, let's say you saw from a daily perspective that you want to go long, then what you can do, you can go ahead when you are exactly right here, for example, you know there is liquidity below this area and also below this area. So if price taps anywhere, where is it gonna tap onto? It is either gonna tap into this order block. Actually, this whole movement is an order block. You can minimize this area either to this one right here or to this fair value gap that you see right here. So the first way to use a fair value gap is from a higher time frame, and you can wait for price to tap into your fair value gap in order for you to take a trade. Now let's go ahead on the 1 minute time frame on the exact same area. We were exactly, let's say, right here, and we knew that on 8:30 yesterday we had news. This means that we are not doing anything at least until 9 o'clock. So let's see how Nasdaq played out. And of course, we waited for the 9:30 algorithmic move as well. Let's check this out together. Okay, we are at 8:30. You see the news. That's why we have impulsive movements. One thing that you have to think about now is that less experienced traders see those fair value gaps in order to trade from. What you will do, because you are smarter than them or more experienced than them, you know that there is more liquidity to be grabbed below these areas. Whichever the case is, I will show you now how we can utilize the fair value gap to our advantage. The first thing that we did was to identify a fair value gap from a higher time frame such as the 1 hour time frame. Now we are waiting for the algorithmic move of the 9:30, or as I teach it in a previous video, if we have news later on, then you will wait for the news, and we know there is liquidity below these areas right here that I have highlighted with a white line. Even if you would want to enter from fair value gaps such as this one, you wouldn't be able to enter because you don't have a proper change of character. Let's see now what happens when we enter our zone. And you can see, by the way, the time is 9:35 New York time. There you go, the first sign of strong movement. Is it enough for you to enter? No, it is not. Why? This is where I will talk about the potential fair value gap as well. This area right here should be broken, okay? Only then we have a change of character. And if it is being broken impulsively, only then we have the potential fair value gap or the actual fair value gap. I will explain in a bit, just bear with me. There you go. How did we break this area? Just with a wick. And what can you notice here? That we did indeed fill in this area right here, so there is no fair value gap in this occasion. Let's move forward and I will show you the potential fair value gap as well. So still we broke with just a little bit, just a small wick. This is not an actual change of character. Let's move forward and see what is gonna happen. We create new areas that we expect to be broken, such as this area right here. Of course, we know there is more liquidity below this area, but there you go. We just grab the liquidity below this area as well. And now we have our new area right here. Is this a proper change of character? Not yet. Let's see what happens here. You see the fair value gap, and I'm gonna delete this line right now, the higher time frame fair value gap. You see this got filled as well. We just left a very small fair value gap, a very tiny one between this and this wick, which of course we don't care about right now. We don't have a valid change of character anyways. This got filled as well. Okay, let's see what we got here. More liquidity being grabbed for those greedy people who keep entering positions. Okay, this is more liquidity being grabbed right here. And now the new point, let's say, of change of character is this one or this one right here in order to be more safe. But this one will do it as well, because this candlestick, you see the low of this candlestick is above the low of the previous candlestick. Let's go ahead. There you go. Okay, we broke impulsively above these areas. We had the confirmation of being in the fair value gap area of a higher time frame, in our occasion of the 1 hour time frame, and now we have created the potential fair value gap. What does this mean? This means that one way that you can enter is to wait for the next candlestick to be formed and see if there is a fair value gap created. How I am entering most of the times when I'm seeing these types of movements where there is a higher stop loss, I will just wait for the retracement and enter immediately right here, let's say, which is what I call the potential fair value gap. Why do I call it the potential fair value gap? Because the next candlestick has not been formed yet. We don't know if the next candlestick is gonna fill in this gap right here. The potential fair value gap is very, very strong. And if I would call this trade, I did call the trade on USD CAD because there was more reward to risk, but I had this trade ready I would call it with a market execution as well, and you will see, you might say the stop loss is huge, but you will see this is not the case. What I'm doing, I'm waiting for a little bit of retracement usually, and I call the buy order on my signal service, and I also take the order with a market execution. So when you see the retracement, let's see here, I just enter instantly on the retracement. So I would have been activated, let's say around here. Look now, because we were very zoomed in, what am I expecting on this movement? First profit would have been actually this area, a 3-to-1 reward to risk. This is how it looks on the 15-minute time frame. Second target would have been this area. Okay, and then you can go, of course, according to my analysis on the 1-hour time frame and say that I am even targeting these areas. So actually, first target could have been here. Second, you could go for this area right here. Okay, and still, this trade has not finished if somebody is inside this trade. Of course, even until this area that we have the retracement, it is a solid 5.6 to 1 reward to risk. What did we learn today? We learned 3 ways that we can implement the fair value gap to our trading arsenal in order to enter winning trades. First and foremost, go to a higher time frame and note down your fair value gaps, such as this one right here. Secondly, wait for price to come back and retrace and test this fair value gap. Then identify an impulsive change of character, such as this one. You can enter instantly with a market execution on the potential fair value gap as I teach it. So either wait for a minor retracement such as this one, or enter instantly exactly right here, stop loss below the low, and then from a higher time frame perspective, you can go ahead and target, first target, let's say right here. Okay, second target would go either down here or up here. And of course, this trade is still running. So this was the fair value gap. Hopefully you liked this video. Be sure that you go ahead and check out my trading signals, as also the ChrisFX Academy. You learn once and you keep it forever. This will be the most important decision of your life, plus you will have me there as your mentor to answer every single question anytime you ask on any currency pair or any indice or whatever you are interested in. Furthermore, leave me a like and any comment that you wish, because I will include you in the giveaway, where I will be giving access to 2 persons out of the 100 in the ChrisFX Academy for 1 month absolutely for free. This is gonna do it for today, traders, and thank you all for watching. Until next time.